So I think we're in for a lot of choppy market action.
Sachs, 3 asset bubbles, clearly all being impacted. We had stocks. Looks like that story was pretty violent. Then we had crypto. This last 2 or 3 weeks have been absolutely insane in terms of that asset bubble. And now record high inventories for homes, record sales are now dipping below the average of the last 20 years. And we're seeing mortgage origination just absolutely get crushed. 6% mortgages just a couple of months ago. It was 2.x for some folks. So when you look at those 3 asset bubbles, do you buy Chamath's, hey, we're going to see even more deprecation in these for another 18 months possibly? Or do you think we've taken such crazy action and this has come down so violently that we're now bouncing along the bottom? Bouncing along the bottom or 18 months of more pain?
Well, the stock market, especially growth stocks, may have taken the majority of the carnage. But you're right, there are other asset classes, and I think we're going to see the carnage start to rotate into those. So you're right. If you look at residential real estate now, the prices are at the highest they've been relative to median income since something like 2006, 2007, before that sort of great real estate crash that precipitated the Great Recession of 2008. So I think there are going to be more shoes to drop. I just want to build on Chamath's point about root causes here. Milton Friedman once said that there's nothing quite so permanent as a temporary government program. The temporary government program was quantitative easing. We had this Great Recession of 2008 that could have turned into a depression. They broke the glass in case of emergency. They started this QE, which is basically the government intervening to buy bonds in the market. They had never done that before, and they loaded up their balance sheet. The crazy thing is that program was still continuing until last year. Why? I mean, it was like on cruise control.
So if you think about taking $30 trillion out of the global economy, you're talking about almost, I think it's 85 trillion is the world GDP. So it's almost half of an entire year's worth of global GDP.
The markets are in complete turmoil. SPY down 21% year to date. Dow's down 17% year to date. As Sachs has pointed out, that is not representative of what happened to growth stocks at the same time. And the May CPI went up, and it was at 8.6. We also got the 75 basis point rate hike. Who wants to start here? Chamath, I mean, it's markets, so maybe I'll just dump it to you first, and then we'll go around the horn to Sachs and then Friedberg.
Wow, there's a lot to say, so bear with me for a second. But the thing that you have to do before you talk about what is happening now, I think it's probably useful to go back, and you have to really start at the end of the great financial crisis. And the reason is there was a bunch of people coming out of the GFC who confused what the US government and some European governments were doing. At the time, there was the risk of a huge financial contagion. And so the US stepped in, and the Federal Reserve started to use their balance sheet to buy toxic assets, right? And the ECB did that, and I think Japan did that as well. Anyways, a bunch of banks did it. I mean, a bunch of governments did it. And then there was this body of pseudoscientific economists who coined this thing called modern monetary theory, which basically said, hey, you can keep printing money and introducing it into the economy to smooth things out and to actually drive long-term growth. And it turns out that a bunch of government officials fell for it. And if you fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about 35 odd trillion dollars of money into the economy that should have never been there. So the thing to remember is we have not necessarily just been obfuscating true supply demand in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system. So one of the things that we have to realize is that all of that money somehow needs to get destroyed in some way, shape, or form if the true economic equilibrium is meant to be found. What is true supply? What is true demand in the absence of government sloshing money around, trying to prop up things that should not be propped up, or buying votes, or all the grifts that these folks have engaged in the last, decade and a half, have to get undone. So that's the backdrop. So if you think about taking $30 trillion out of the global economy, you're talking about almost, I think it's 85 trillion is the world GDP. So it's almost half of an entire year's worth of global GDP. It's going to take 3 years probably of the slow, meticulous, running off of money, not reintroducing new money. So it seems like we're at the beginning of something that's going to be long and drawn out. Now that's separate from whether we're in a recession or not. That's just the bear market that we're in, right? And so you have to look at asset prices today as a microcosm of a much larger trend that has to be about fake money pushing asset prices up, and now taking all that fake money out and finding out what the real price of something is. And I just don't think that takes 6 months. So for all the people that were, fingers crossed, hoping that this would be the end of it, Fed raises 75, we're done with this, they're going to raise 75 more. I just think that's not how it's probably going to be. It's going to take, 24, 36 months. That may mean the bottom doesn't happen for another 18 months. 9% inflation in Europe, and they're still buying bonds.
Right. So you go back to last year, the Fed bought 54% of the government's debt, despite the fact that the economy was growing at like 5% GDP, that it was bouncing back really strongly from COVID, that you had the stock market at all-time highs, and yet they were still intervening with this massive QE. And then when we got the surprise 5.1% inflation print last summer, they didn't stop QE till the end of Q1. So you're right, they kept basically printing money, and it's still going on, and that's created massive distortions in the economy. Now, so the Fed, I would say, is the number one culprit here, and Jay Powell is the number one culprit, but the number two culprit is the Biden administration. And I think Biden did three things very early on in the first few months of his presidency to effectively tank his presidency. Number one, he canceled our energy independence on his first day in office, canceling the Keystone Pipeline and making it much harder to drill. And of course, energy inflation is the number one factor in this sort of overall inflation. Number two, he pushed through that last $2 trillion of stimulus on straight party lines, the ARP, the American Rescue Plan, after Larry Summers said, economists in his own party said, this is going to create inflation, don't do it. And then the third thing is, and no one really talks about this, is that Biden could have used diplomacy in 2021 to basically find an off-ramp to this Ukraine crisis before it turned into a full-fledged war. And if you listen to the economists, the international development economists like Jeffrey Sachs, he basically says that Biden polled his cabinet and said, listen, should we negotiate and compromise with the Russians? They all said no, and Biden handed down the order, we will not compromise with the Russians. So now we have this massive war in Ukraine that's fueling food and energy inflation. It's going to tank his presidency. And I don't even think there was any debate in his cabinet about this.
We may not be negotiating against Russia, but we're enabling them to print enormous surpluses. Meaning, I don't know if you guys saw, but there was an article today. Janet Yellen is traveling around basically convincing folks to not include Russian oil from a bunch of import bans so that these Russian oil tankers can be insured. Why? So that they can sell this oil to places like China and India, etc.
The ruble's at a five-year high. The ruble's at a 5-year high.
We push for all these sanctions. Europe gets on board and says, we're going to do it and we're going to take the lumps. And then we go around Europe and basically say, well, we kind of want to fight this proxy war, but at the same time, we want to try to fix inflation and we didn't mean to cause this. And it's completely disorganized what's happening.